George Magnus is a senior economic advisor at UBS. He warns that Britain must learn from Greece and the Greek crisis by taming public borrowing and boosting employment. First of all, thank you very much for joining us this morning. We've just seen these employment figures come out, and the headline says that less people are claiming benefits. But actually, when you look at it, there are an awful lot more people who are unemployed. This really isn't good news, is it? Because a lot of these people are young people and people who are not able to claim benefits. Youth unemployment is a problem.
Yes, it is. I mean, I think the labour market statistics will probably, continue to drift in a kind of a positive way in the lines of today's report, because we've got a good old-fashioned production rebound going on, and how long that lasts is a moot point.
We've got a weak pound as well, which is good for exports.
And it helps. But the key issue is there's a lot of labour market data that doesn't hit the headlines in this way,
yes.
Like how many people, have been discouraged from looking for jobs that would otherwise want to, how many people are working part-time when they would rather work full-time. And, structurally, the labour market actually is not as strong as these numbers make it look as though it is.
Now, we've got a raft of numbers really out this week. We had inflation higher than expected yesterday. We're going to see the deficit, the latest figure on the deficit out this week. We're also going to see GDP. They're going to be imbued with extra significance, aren't they? Because they're going to be seized on by the parties in the race for the election.
They'll no doubt, you're quite right, they'll no doubt be seized upon as corroborating or refuting whatever the political parties want to say. But actually, to be honest, I think they're quite irrelevant, really, to to what's going on in the economy and probably to the outcome of what is probably the most uncertain election we have had in as long as I can remember.
Indeed.
And I think that's because we know that the public borrowing is a problem that has to be addressed. We know that the economy is probably pulling out of recession. We don't know what the impact of the snow was on GDP, but let's say it's adjusted for in terms of the statisticians. It still means we've got a kind of a plodding recovery going on with an uncertain duration, and the labour market, as we just discussed, is somewhat compromised still as well. So I think that they might temporarily colour the tempo of the campaign, but I think in a very kind of short time, I don't think it's changed anybody's mind.
No. Well, let's look at public borrowing, because whichever party comes into Downing Street, or indeed if it is a coalition, we're going to have to see that being cut. And nobody has really explained to us, I guess because they don't want to in the run-up to the election, just how they're going to do that, quite how harsh that's going to be.
Yes, I mean, and I think this is one of the lessons that we can see, from what's going on in southern Europe and in Greece as well. But
yes.
It's also in the UK, we have a deep-seated structural malaise. Our growth model, our economy has been badly shocked by the crisis. The housing sector, the financial services business, these two sectors were big sources of tax revenues, huge sources of economic growth, and they've gone. I'm not saying they're never coming back, but they've effectively been compromised. So I think the government, and I know that you've discussed this already on the programme today with others, I mean, the government does have to come up, whoever it is, and hopefully it won't take too long to form a government. We don't know that either. But the government will come up with a plan and with a strategy for growth as well. You can't get out of a debt crisis without GDP growing on a sustainable basis.
And if you do want to kind of compromise the financial services industry, we are in trouble with where else this money is going to come from.
Yes, so we have to find new ways of generating the growth in our economy by looking at things that we're good at, in terms of information communications, technology, life sciences, creative marketing, design industries and so on. But they're not really talking about that.
Thank you very much indeed for coming and talking to us today.